Hello, everyone, and welcome back to the Cryptolabs YouTube channel. My name's David. I'm the technical analyst over here at Cryptolabs, and I've got some interesting analysis that I'd like to share with everyone here today. I'm going to borrow a little bit from Mr. Arthur Hayes's Token 2049 presentation entitled Full Send. Just want to give credit where credit is due, but I'd like to start off by just touching on a chart that I know we've seen floating around the interwebs all over the place. And this is a global liquidity overlaid on top of the price of BTC. And it looks like there is a positive correlation between global liquidity and the price of Bitcoin. But hold on a second, let me just fit it to the curve perfectly so that it tells us that we're going a little bit higher here. Okay, well, maybe that's good enough. So what this chart is supposed to tell us is that the price of Bitcoin is likely to appreciate over the coming months. And so rather than just relying on this chart to guide us, remember, this is just one tool. I'd really like to take a moment here and just talk through how we've gotten to this point in the bull cycle and what some of the catalysts may have been that brought us here and where we could be likely to move in the future. So let's start things off with what got us here. And I'm going to borrow again here from Mr. Hayes. I think that his analysis has just been extremely valuable, on point. And we've got all of these events that happened at the bear market lows here. And keep in mind what else was happening during this period of time. 2022, 2023 into 2024. Well, inflation was very, very high as a result of all of the money printing that took place during the COVID pandemic. Really, it was the government response to the COVID pandemic that led to all of the inflation that we're experiencing now. But there also were a bunch of events, bank failures that happened, and of course, FTX blowing up. So let's just talk through this real quick and let's lay the foundation for what may have propelled Bitcoin higher up to the present day. And then we can talk through and say, hey, you know what, where could we be headed from here? So we had FTX blow up and declare bankruptcy, I think on November 11th. We had Signature Bank, which was closed by regulators, probably as part of some choke point operation. And then we had Silvergate Bank blow up March 8th. We had Silicon Valley Bank blow up March 10th. And then we had First Republic Bank blow up May 1st, even though they received an injection of capital from a bunch of other banks. They were still purchased by, I believe, JP Morgan Chase. And so during this period, inflation was, really just kicking into high gear and really had not started to decline yet. And so during this period of time, cutting rates was not an option. And so there needed to be a source of liquidity to push the price of Bitcoin up. And what Hayes posits is that that source of liquidity was the reverse repo facility being drained by then US Treasury Secretary Janet Yellen. And so what Hayes posits is that the draining of the reverse repo facility to the tune of roughly $2.5 trillion here, that's this blue line, that was responsible for supplying the US dollar liquidity that helped to push the price of Bitcoin from, at the beginning of the bull cycle, I think that was probably September, October 2023-ish, to push the price of Bitcoin from, what was it then, like 20K, all the way up to where we are today. And so if this is in fact the case, then where could we be headed from here? And so I just want to touch on this real quick. So, back here during this period of time, um, it was not possible for the Fed to cut rates because inflation was high. So rate cutting was not an option. That was off the table. And if you recall, um, even when rates were at zero and inflation started to really ramp higher. Uh, for months, Powell was saying that inflation was transitory, laugh out loud, until it wasn't until February of 2022 that Powell, engaged in the sharpest rate cutting cycle or rate hiking cycle in history, where we saw the Fed funds rate go from zero to over 5% over the course of, what was that, like 18 months or something? Very, very, very fast. Um, and where it's important also to note, where did Powell start cutting rates? He started cutting rates right before the election. Right before the election, it was September, I think it was September 17th or 18th, and he cut rates by 50 basis points when the economy was stronger then than it is now, and when inflation was higher then than it is now. And yet Fed Chair Powell refuses to cut rates now, even though monetary conditions in the United States are tighter than they were when he began his rate cutting cycle. So as inflation continues to decline and as the unemployment rate continues to tick higher, you've got to ask yourself this question: where is the US dollar liquidity going to come from to help push the price of Bitcoin up to these 150K plus targets? Because if the Fed's dual mandate is to maintain maximal employment while keeping prices stable, aka keeping inflation under control, if that is the Fed's dual mandate, but Powell was willing to cut prior to an election, but not willing to cut now, even as the GDP forecast is now very positive. The survey data is weak, but the hard data is not. So if the economy seems to be resilient and strong even, and if inflation is coming down while unemployment seems to be ticking higher a little bit, well, why wouldn't the Fed cut now? Seems like there may be some underlying reason why Powell is just not willing to cut. Some people want to say that he's channeling Paul Volcker's spirit, but I think that the more likely explanation is that Powell doesn't like Trump, and he's not willing to support Trump's agenda, but at some point he's going to have to. So as we see, this economy in the United States is quite strong, and if we're starting to cast doubt on whether the Fed will aggressively expand its balance sheet, aka quantitative easing, if that is not going to happen, and if Powell is really unwilling to cut rates, well, have no fear. Scott Bessent is here. He's the new Treasury Secretary, and he's got a plan for being able to inject the US dollar liquidity that is required to fund these increasing deficits in the United States and pump our bags as holders of crypto. So we've got to understand what it is that uh, Percent is likely to do, and we've got to understand what Hayes posits will be the means by which the US dollar liquidity increases over time. And so what Hayes posits is that bond buybacks will be the mechanism that boosts US dollar liquidity and helps propel Bitcoin and other crypto assets higher. So how does this work? Well, I've got a step-by-step process here. I'm going to go ahead and opine on this for just a moment. So step one, the Treasury issues US Treasuries, which are purchased by relative value hedge funds, let's say. So new bonds are issued and bought up at auction. Those relative value hedge funds, the reason why they're willing to buy these treasuries is because they're short futures against the treasuries. And this, with infinite leverage, allows them to generate massive profits as this basis trade contracts. So the Treasury issues new treasuries they're purchased by relative value hedge funds who then immediately get short futures against those treasuries. And then the US Treasury itself uses the proceeds from the sale of those new bonds to buy back or repurchase older bonds off of the balance sheets of those relative value funds, therefore injecting cash and US dollar liquidity into the system. The result? Added US dollar liquidity. So why use these relative value hedge funds as almost like the tool or the vehicle to get this process done? Well, because if they're able to repeal some of the reserve requirements, then banks would be able to offer these relative value hedge funds essentially infinite leverage to then go out into the market and buy these treasuries at auction, then get short futures against them, and that's how they profit. But this process funds Besant funds this government spending. So this is what Hayes posits. And so let's say that this all happens and that Bitcoin continues to rip higher. Well, at what point in time do we start thinking about, picking up some alts? Because at a certain point, there's going to be a rotation out of Bitcoin and into, riskier altcoins. And so what I'm watching to help me determine that is ETH BTC, and I'm watching Bitcoin dominance. These are the two items that I'm watching closely here. So ETH BTC, ETH found support in BTC terms at a level of long-term support. Now, if we see continuation and this move continues to the upside, well, then I think that that would coincide with a declining level of Bitcoin dominance. Now, if Bitcoin dominance continues to decline, at a certain point, it may enter free fall. That would be our alt season. And so timing is important here. And right now, I think the play is to be in Bitcoin and then large cap alts. I believe that the rotation will first be from Bitcoin into large cap alts, and then from large cap alts to much more speculative plays. And we haven't seen that rotation into the speculative plays yet. I think that we're going to see rotation from Bitcoin into large caps first. So that's what I'm positioning myself for. I am long BTC, ETH, Solana, Sui, Tau, a handful of others, but these are my core holdings. These are all large caps, notice. So um, if this is to hold true, then that means we've basically got to move to the upside until the end of June or maybe beginning of July or so. So appreciate everyone's time. Thanks so much for joining live, and I will see you during our next call.